In this presentation, we will enter the bank reconciliation for the second month of data that we have entered into QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We're now going to open up the bank statement that we're going to use to enter the data. We're in our folder, so here's our customer folder. We're in the docs of the folder, the 2019 file. I'm in February. We've got the client provided documents, including the bank statements. I'm going to make another copy of it because we kind of marked up the bank statement in order to enter the data. So I'm just going to make another clean copy that we can now mark up again in order to enter the data into the bank statement. So this is just to point out that you may want to have a clean copy of the bank statement that's provided by the client, whether you print it or whether you have a hard copy or a digital copy, and then make copies of it so that you can mark them up for various reasons. So I'm going to right click on this item. I'm going to copy it. I'm going to put it down below and paste it. We'll right click and paste it. Rename it by double clicking on it, or right click, not double clicking, right click and rename on it. And then we're going to say this is the one that we're going to do the bank rec with. And then I'm just going to open it up. I'm going to open it with Adobe Reader so that I can open it offline. So I'm going to File, right click, open with Adobe Reader. And that'll open it with our Adobe Reader. Should be a free program. Here we have our bank statement for the month of February. Now we've already entered this data into the system directly from here. Now we're going to do the bank reconciliation, and remember that all we're really doing is just making sure that we didn't enter any data input errors, which we did. So we'll find the data entry errors by doing the bank rec. So the reconciliation process is not as powerful if we were doing a full bookkeeping process, but still necessary, still useful, still helps us to not make errors. So we want to make sure we reconcile no matter what process we do. It's one of the major controls we have. So we're going to go back into our system. So here is the QuickBooks system. We currently have the home page open. We've got the open windows open. The way to open the open windows is to go to the views dropdown and the open windows list. Within this section, we're going to start the bank reconciliation by going to the banking dropdown up top. We're going to go to the reconcile, bank and reconcile. And then within the reconcile, we're going to have the date, should choose the correct date. We're on the checking account. It should give us the correct date now because we've entered the first bank reconciliation. It should now default to whatever the next one is, whether it be the current month or not. It should just pick the next month in line that we have not yet reconciled. And that's because it'll also pick up the current balance or the beginning balance, which now should be correct, which is nice. After that first reconciliation, we don't have that issue that we may have with the first bank reconciliation of, is that first beginning balance correct or not? So here we got 36203, hopefully that's what we have here. 36203, that looks good. So we can check that off, and we may even just want to highlight that and say, hey, we've got that's found on our bank statement. So now we're going to go back here. We need the ending balance. So we're going to go and say, okay, the ending balance is going to be 40209. So 40209. That's where we're going to end up after we enter all this information. We're not going to enter the service charge or the interest earned here because we entered them directly into the register. And I think that's an easier way to do it in any case than using these two items. So I'm going to keep it there, and we're going to continue. We'll start with the deposits. The deposits should be pretty straightforward because we entered them directly from here into the register. So we're just going to tick and tie all this information out. Now note that because we entered this information directly to the register, we may try just to check everything off and see if that works. Meaning we could go to the register here and say, everything should tie out because we entered everything directly from the bank statement. Meaning I want this to be 0 at the end of the day. And that would mean that what's in our system matches what's on the bank statement. And so if I say just mark everything, then we could say, that should work, but it didn't. It didn't. Why didn't it work? Probably because we miskeyed something. So that will never work if we used a full service system because we have outstanding items, and that just won't work. In this system, it would work if we had input everything from the bank statement into here correctly. We, this time, purposely did not, so that we can see some changes and note that that's common, and that's why we still do the bank reconciliation. So I'm going to unmark all of this, unmark. And then we'll go through this one by one. It's going to be great. All right, so we've got the deposits, 1980. So we're going to go back here, just check it off, 1980. Here are the deposits. Note that even the dates should match up in this system. And again, that wouldn't be the case if we did the full bookkeeping system. The dates would be off. But here, the dates should line up. The amounts should line up. Again, everything should line up because we took it directly from this statement. So we've got that. I'm going to highlight it. Right click, highlight. 1340. 1340. Going back over here, I'll go do this a little bit quicker. We've got the 910. We've got the 910. We've got the 1670. And note that I'm going from the bank statement to the QuickBooks. And that's the way we should be doing it and it would be more, if we did the full service process, that would be even more relevant. In other words, you get mixed up going both ways, thinking about I'm going from here to the bank statement, or am I going from the bank statement to here? You typically want to be going from the bank statement to the books. So 1670, although you'll get mixed up with it sometimes. And sometimes it won't matter, but if you're off and you want to do a thorough job, then this is the way you want to go. So then we have the 944 on 212. So 212, I don't see that one at all. So the 944 is not there. So that's one of our mistakes, it looks like. We could keep on going and find everything else, or we can enter it at this point. Let's keep on checking them off, and we'll leave that as unhighlighted. 1870. And if you're working with a supervisor or something, this is probably the way we'd want to do it, because we might not know how to enter that. We might give this to someone else and say, hey, enter this data. Find the ones you can. If there's anything that doesn't tie out, let me know. So we'll tie that out, and we'll say that we don't know where that one is. So we'll keep on going through here. 1634, 1634, got that one. 1277, we're going to say, 1277. We've got the 1980, 1980. And then the 1340, 1300. So again, that looks like it's off by 40. So I'm going to leave that one. I'm going to say that one's there, but I'm not going to mark it off. 1570, I can't find it exactly, and so we're not going to mark it off. So there's the 1570. 1700, 1700. And if we do the whole thing, then we can be fairly sure that those two, like this one is probably a miskey of obviously the 40, and the other one we probably just missed because we marked everything else off. Let's continue on this side, and again over here we got a little bit more detail because we got the check number. Check number is something that we may often be off on too because it will try to auto-populate. It's not really critical that the check number is off, but we would like to have it as close as possible. So if we catch the check number being off, we'll try to adjust that so if there's any questions down the road, we can tie our books out to the bank as easily as possible. The payee should match and the date should match. And so notice these will all match up. The dates wouldn't match if we were doing the full service process, but in this case, we entered the date not as the date we wrote the check, but as the date that it cleared the bank, and therefore everything should match up. We're primarily looking at the amounts. If the amounts match, then we'll be able to reconcile. So that's going to be the reconciling factor here. So we got 520. There's the 520. Going back over, we've got 944, so I'm going to highlight that, 944. And then the next item is going to be 120, so we'll go back over here looking for 120. And then we've got 970, so we're going to go back over for the 970. The 1,600 is the next item, so we'll say 1,600 is the next item. And then we're looking for 1330, so we'll go back and find the 13, and it's not there. So that's one, it's not 1330, it's 1030 for first, and it's still not right, so it's not there. So we'll skip that one. Looks like it's the Visa card, and that one we could pretty much say, yeah, that's the Visa card. Someone miskeyed that one, it seems like, but we'll skip it for now. And we're going to say 1,500. Next one, Sunlight Rentals, 1,500. Next one is going to be 410, 410. Then the 598, 598. Then the 300, the 300, then the 1598, 1598, then the 3,539, 3,539. We had to skip a couple, and that's not unusual because notice in order not by check number but by date here. So just be aware that we could probably order this in whatever ways most relevant, whether it be date or check number. We could reorder this by check number if we so choose. And so we're going to go back over here, and we have found that one. And then we're looking for the 630, 630. And then we have the other things that are not checks down here. And those are the ones that may be a little bit more difficult to, I mean, what order are these going to be in? If there is a date on it, we can have them by date. But notice if we just entered these as the end of the month, the bank charges, they might not have a date. They just might say, hey, we took this out of your account during the month. So I usually put that in there as of the end of the month, but there's no check number. And that's why it kind of went out of order between these two checks here, because these are also as of the end of the month. So there's the 300 and the 150. 300, 150. Okay, so there's all of it. So we found that one, and we found that one. And now we can go back and say, hey, if we're going to a supervisor, if we had someone else do this, they should get to this point and get here pretty easily. Say, okay, now we're off by this, and this. If we were to take out the trusty calculator here and say we have a deposit of 1030 minus the check 944. Actually, it's the other way around. We've got a deposit of 944 plus 1340 minus the check of 10930. You would think we'd be off by 1,254. If we go back to our report here, we're off by the 1,254. So that then has to be those three items. And so we can check these two off once the balance have been corrected. We need to correct these two balances and add that last one. Once we correct the balances here, then we could check them off and add the other check. So let's do that now. So we're going to go back here. This one wasn't in the system at all, so we'll have to go to the check register to do that. So we'll go back over here. We're going to go to the reports or banking, use register. And this one happened as of 2/12. So on 2/12, we'll type 021219. It's a deposit, DEP. On the deposit side, it was for 944, and they all go to sales. And that's it. And then I can go to the open windows, find our reconciliation, say that deposit should have been updated now. Here it is over here. I was looking on the check side for a second. So there's the 944. All right, now these two, we could double click on these. We can actually find them in here, like double click on them and find them this way and then change the amount here. Or you could find them in the register. You go to the register and look for the date, 2/12. Here's the register. We're looking for 2/12 and we'll find that deposit or that check or whatever we're looking for. I think it's probably easier to double click on them, but just note that there's two ways. So I'm going to go back here. And I'm going to say that this 1,000, let's just double click on it. And let's do that this way this time. And it should be 1,030. So if I go back out, this should be 1,030. Now note here, if you do it this way, we have to change it on both sides. So if I did that and I tried to save and close, it won't let me because it says, do you want to record your changes? If we say yes, it let me do it. Hold on a second. If I go back in there, double clicking, oh, it changed it automatically down here. So it forced the change, but just note the change has to happen on both sides there. So you might get a warning or some action, and that's because the two sides, this represents cash going down, this represents the other side, the expense. So we'll save and close on that one. Next item, so now we're going to check that off. The next item is this 1,300. So this one we just fixed. I'm going to highlight that. We fixed that. We fixed this one. And now this 1,340, they need to add a 40 here, I believe was what. So we're just going to double click on that. And then we're going to add a 40. This should be 1340. And that's what we need there. So we're going to save and close that one. Change, yes, we want to change it. And then check it off. And that should put us back in balance. Now, once we're exactly in balance, we're good. Remember, we don't really want to reconcile unless it's totally in balance. You could force it. You could force QuickBooks to enter an adjustment. But that really diminishes the need, what the value of a bank reconciliation. And it should be easy to do considering the fact in this system, all these numbers came directly from the bank statement. So we should be able to tick and tie them off pretty easily. And if they don't tie out, we should be able to find the problem pretty easily because we just entered it from that document. So we're going to say reconcile now, and we'll reconcile this information. And now we can be pretty confident that the balance sheet and income statement we had looked at prior at least has all the information that has been cleared through the bank. So we'll say both. I'm going to display. Now remember that this bank reconciliation, this is really what a bank reconciliation is. What we just did is the process of reconciling, and it's not really a full reconciliation because we're not really comparing two sets of books. All we're doing is data inputting the bank's books to our system, as opposed to us double checking our books compared to what the banks did. So that means that there's no real difference. There's no real reconciliation. This reconciliation isn't kind of a real reconciliation because our books are going to tie out to the bank's books because all we did was enter their numbers into our books. We didn't do the books separately and then double check them. So therefore, we need the reconciliation, but it's not giving us any new information. There's no change, there's no difference, there's no reconciling items between our books and the bank's books. There's no outstanding checks or outstanding deposits. There are in reality, but we don't know what they are because we haven't been recording the books, the checks, and the deposits real time. We're only recording them when they clear the bank. So just keep that in mind, that we still need to reconcile, but the report doesn't give us anything of much value. It just tells us that we've data input everything correctly, which is good. That's good. But it's not something that if we provide someone else, it's really going to help them make any analysis or reconcile anything. It's not giving us any more information than the bank statement, in other words, or our books, which are basically the same thing. So if we close this out, this one's the same idea. It looks like it's got a lot of information in, but this is just the stuff that's cleared the bank. We already know that. It's on the bank statement. There's no difference between the bank's books and our books. So if we were doing a full service bookkeeping, we would have the outstanding items, checks, and deposits. And this would be very useful, the detailed report, because it would tell us exactly the checks that had not yet been cleared. And again, under our system, we just don't know that. And that's going to be a problem with our system, of course, because we don't know the checks that haven't been cleared. We don't know the ones that have been written and haven't yet been cleared yet. And that's part of what's nice about a full service bookkeeping process. But that's the costs and benefits of entering the system in this format and more of a cash basis, relying just on the bank for the information that we have. For more accounting information and accounting courses, visit our website at accountinginstruction.info.